Hello traders out there and trader land. My name is Des, the owner, founder of freetradingvideos.com Incorporated. Let's get after it. A lot of people don't know this, but I am the pioneer of trading videos starting back in 2004. Nobody has been doing online trading videos as long as I have been doing them. Anyway, glad you could be a part. You are one user out of 155 countries that come and watch these videos, and I will not disappoint. This is the weekend edition, good through Sunday, October 6, 2013. And the first thing I want to do is lead off with some stocks that are on our Stock Picks V newsletter. V stands for video. Video newsletter comes out weekly, and it is a list that's very well rounded because we pick our companies fundamentally and trade them technically, and we not only go bullish but we go bearish on those that are fundamentally weak. It is the best, most thorough, most well-rounded stock picks newsletter out there today. See it for yourself. Details at the end of this video. But this week, CREE, C-R-E-E, was our big winner. Gang, this has gone up almost 23% in 1 week. We down here around $25. Now we're at $75 range. It's gone up, what is that, 200%? I mean, that's a huge run in just a matter of a year. This is a weekly chart. Big run on that. And again, this week, just a ginormous run. Then another one on the bull list, KKD. This one popped nearly 10% for the week. We were down here around $8. Now we're at 22 and some change. I mean, just huge runs. Another almost 200% increase in a matter of a year. And these are on our bull list, and I guess I'll show one on our bear list, IRM. This one's down almost 7% for the week. We're up here on $40. It's on our bear list. Started crashing. It's down 26 right now. A lot of money to be made. Remember, stocks like to take the stairs up slowly and jump out of the window on the way down. Stocks will drop 66% faster than they will rise. Mark that down for all you geeks that like useless information. And let's take a look here at the markets. The S&P daily, we have this big run, a pull back at the 50% Fibonacci retracement area. It's a great bull pullback, a lot of choppiness here. Buyers coming in at these lows. Remember, you can always go full screen to watch this in a high definition. If you're having a hard time seeing this, I can blow it up a little bit so you can see it. People buying the lows, bringing them right back up. So not too bad on Friday, big rally. So what we're looking for is more upside potential. We are below the 20-day moving average. Need to get above that. We could have a sizable rally, but if you zoom back out here, I want you to see that there are two big trend lines building a big rising wedge. If I go here to the MACD, you'll see that we have a bearish divergence on the MACD. So long story is this. We could probably chop around in this formation for a while heading up. However, as soon as we break this lower trend line, we're off to the races to the downside. Now, here's the weekly chart on the S&P 500. Nice uptrend. Higher swing highs, higher swing lows, but here recently we have an equal swing high. I did a quiz this week saying what type of formation do we have here. A lot of you said double tops. Technically, it's not a double top because this low has not been violated. Textbooks will say the trough or the valley of these two mountains. If it gets violated, then you have a double top trend reversal pattern, M for murder. However, in my book, I've been trading over 15 years, have over 750 students, been doing this a long time, and I can tell you this, if it breaks this lower trend line, then we have a double top trend reversal pattern. It does not need to bust that low. So what you do have is equal tops, an ascending, rising, lower trend line. So the answer is an ascending triangle. If you don't know what an ascending triangle is, go to the website freeonlinetradingeducation.com. Go to the Chart School. Chart School will teach you tons, and also make sure that you take the course. The 101 courses are free. They're great. Get signed up for those. And before I get into the rest of the stocks, I'll show this to you. Go to the website. click here. Let me log out. Here are the products. Anyway, log out here. Get signed up for the 101s, but more importantly, get signed up for this class. It's a live class we're doing coming up on October 9th. Get signed up for that. We're going to teach you and show you some new things about trading tools that are out there that we can use that will be hugely beneficial to you. So do not miss that. Get signed up. It's free. All right, so let's take a look at the monthly on the S&P. The monthly, we are on a major run to the upside. We really need to get over 1700, gang. That's the cast me out if we can do that. If we can get going again on the weekly. 1710 is the big number we need to get over. So if we get over 1700, 1710, then we could be up here to this upper trend line fairly quickly. Let's go to the NASDAQ. Now this is the weekly chart. NASDAQ started off the week really bearish, but we run higher, pretty good. Now the daily, let me show this to you, big rising wedge, but we're hanging out at the resistance area. Gang, relative strength on NASDAQ and small caps, really beneficial and very bullish. We could break out to the upside, but this is a rising wedge, big nasty bearish divergence from the MACD, so this could come crashing down and quickly if we cannot make these new highs in the markets. The monthly chart, we're at a resistance area. Resistance, we're knocking at that door. So this is something that we're watching for, very extended, this resistance that can come crashing down on us. So we are watching that. The Russells, again, relative strength, we're hanging out up here at these highs, really nice, but it's a rising wedge, big bearish divergence. Even though we're at these highs and relatively strong compared to the S&P and Dow, this thing could start to drop on us. So you want to be watching that. Now here is a major trend line on the monthly chart on the Russells, monthly chart. We're just getting started for the month, but we're pausing here at a major resistance area. You can see that here. It's nasty. The NASDAQ is near there. The Dow for the month just basing sideways. The S&P for the month basing sideways. Now let's get into gold. This is important that you look at this. Gold, as far as the daily is concerned, you can see we have a falling wedge, bullish divergence. This thing looks like it's wanting to go bullish and soon. Gang, anything over 127.20 or so should be a buy opportunity for GLD. The weekly chart here, big symmetrical triangle. We want to get a breakout to the upside. We are seeing a nice little bull pullback to about the 50% Fibonacci. It looks like this thing could go. The monthly chart, if it does step up, this would be a step up on a swing high, and we could start to rally northbound to about the $150 mark. Silver, another falling wedge, very bullish divergence. We're at a resistance point. Look for an opportunity to go northbound. We talked about buying opportunities down here. Hope some of you took advantage of that. The weekly chart, look at this beautiful symmetrical triangle, a bull pullback with a hammer on the rising 20-day moving average. Gang, pull back to about the 50% Fibonacci. This thing could go, and now precious metals are giving us buy signals on the monthly chart. Big falling wedge, looks like it could go. So good stuff there. I'm going to show you Google. Here's Google's daily, big symmetrical triangle. We're at the support area. Now what's cool about this is, gang, you could get in on this right now at a relatively cheap price and sit through a lot of churning and popping. But if it does decide to break out here, you got in at a killer price. Put a stop loss down here pretty tight here. Your reward to risk ratio is fantastic. The weekly chart, we're at a support level with an inverted hammer. This thing could go. The monthly chart, we're high base. This thing could go. Anything over 900 bones is going to be a money maker. So if we go here to Apple, a lot of you guys are Apple junkies. Check this out. Symmetrical triangle. We're hanging out at resistance above all major moving averages. This thing could pop and go. Have some alerts up here above 490, 493. And get in this if it decides to start to run. If you look here at the weekly chart, this thing is toying with breaking out. So be watching that. If you look here at the monthly chart, we have a big bull pullback. We're bouncing off of the 50% Fibonacci, heading up. We're really starting to build kind of a little pennant type formation here. Just be watching that. And let's take a look at Facebook. I mean, Facebook on Friday was up almost 4%. Check this out. Resistance, support, boom. And we're looking for a breakout over 5160. 5160 would be a great area to make some money. And And here, look at the weekly. It's very extended, gang. This thing's going to want to reverse and quickly. We are very, very extended, exponential move. Watch for a big correction and fast. Look at this major step up. You don't get a rocket ship going straight up very often. Facebook has done that. I'm expecting something very similar with very exciting Twitter coming out with their IPO. It could do something very, very similar. So anyway, let's go here. Microsoft, the monthly chart has already broke out. This is a daily chart. I'm sorry, it's daily chart. Big symmetrical triangle. It's already broke out. Here, the weekly chart, we're at a resistance point, but it looks like it's starting to break out of this. So this Microsoft could actually get bullish. Here, nice little bull pullback, looking for a rally of about $36. We're going to run into a little bit of resistance. So I hope this is very beneficial where I'm helping you make some money here. We're going to talk about the Stock Picks V newsletter, but again, sign for the 101s here, but more importantly, get signed up for this class. It is a good one on trading tools and infrastructure that everybody needs to know. But go down here to Stock Picks V newsletter. We're going to help you out with stock trades each and every week, but I'm going to give you 2 weeks completely free. Hopefully that will pay for a full year subscription for you. Again, you get the very best technical analysis. And whoa, check this out. Facebook, we're up to almost 5,200 people coming in. Fantastic. Love it, love it, love it. You guys are great. Share this with a friend. Make sure you get this posted on your Facebook. And all you guys that are doing the podcast, thank you so much. Extra bonus points for you guys if you leave a comment, or because we got, I think, 25, 26, 27 reviews. Right now, we're very fortunate. All 5 stars for that many reviews. Kudos to you guys. We take that very seriously. Thank you, thank you, thank you for being a part and doing that. And for all you guys on YouTube, a shout out to you guys. We love that. We have over 1,500 subscribers, I believe is what it is. And love you guys. So take care, safe trading, and listen to the information coming next, or at least read it. Hope you get signed up. Catch you later.